Hey everybody, Real Estate Ninja here. I hope you are doing great. I can't really see it right now, but the Christmas lights are still on in the city park, and I thought it was a really nice backdrop, but it's pretty hard to see now that the sun's coming up. Anyway, I want to talk today about mortgage refinance demand that is exploding right now. And it's out of CNBC. I want to talk about it, and I'm going to give not advice, but I'm going to tell you what I would do. This was always my rule of thumb when investing in real estate. If mortgage rates dropped enough to where after the cost of getting a mortgage, after the cost, all the fees associated with that mortgage, the refinance, if I would pay myself back in the lower payment within 12 months, I would do it. All right. So right now it says here, mortgage refinance demand jumps 19% after rates hit lowest level since July. And you have to remember that 19%, that going up 19% is based off of very, very historic lows in refinance, okay? People in the mortgage industry are absolutely getting slaughtered. I talk to them all of the time. As a matter of fact, just had a new student talk to me the other day, has been in the mortgage industry, has been a broker since 1984. And he said this is the worst he has ever seen it. So to give you some idea, when you see these headlines, you're like, oh, demand's jumping this much, double digits. You have to remember it's off of major lows. It says here, homeowners looking to refinance are finding savings after mortgage rates dropped again last week. The average contract interest rate for 30-year fixed rate mortgages with conforming loan balances, which are $720,000 or less. Here, let me do this. Let me move you a little bit because this sunlight's starting to get a little wacky. It's the downtown park. Look at that. Hey, I got a good one for you today. We're going to talk about, I love Christmas time. All right, here we go. Stand by. All right, here we go. All right. So it says these conforming loan balances are $726,000 or less, decreased to 7.07% from 7.17. It says also with points falling to 0.59 from 0.6. All right, you have to think about this. That's not a big drop, right? I mean, from 7.17 to 7.07, that's what they're bragging about. That is all the mainstream media has at this point to say, hey, everything's good and better. Everything's great. It's not. Powell's coming out and the Fed's making another decision on interest rates. They're more than likely going to keep them steady right now. But here's the point. Even if they don't raise them, even if they don't, the pain is being felt all throughout the real estate industry. People cannot afford to buy a house with everything being inflated. So what's the one variable that has to come down? The one variable, this is exactly what happened in 2006. It's house prices, okay? Sellers must take a concession. And so that's what's already happening. If you just get on realtor.com, type in your town that you think that real estate's not falling, and just scroll through the first page, and I will bet you that you will find between 15 and 20% of the homes have their prices lowered. Now, real quick, before I go into the rest of this refinance story, you have to not be tricked by a famous trick real estate agents do, and I was one of them, but it's taking that house off the market for just a period of time, a little over 30 days, and then relisting it. So it comes out like a fresh listing. And if you're not an experienced agent looking for that kind of stuff and going, aha, because it shows up in the MLS data, thank heavens, and you go, okay, I can see they already had a problem, so I already know I'm bringing my clients into a distressed seller. That's how you should be looking at things. Good real estate agents understand this, right? New agents, they necessarily don't. And I can guarantee you this, not a lot of buyers understand that. All right. So again, the points dropping from 0.6 to 0.59 is nothing. Does it even save you $1 or $3 a month? Or just in points, sorry. I mean, it's a joke, all right? All of a sudden I'm thinking, mortgage insurance. Sorry. For loans with a 20% down payment, that they said, those are with 20% down payments, mind you. According to the Mortgage Bankers Association, that was the lowest level since July. So more than likely, the spike in refinance rates are from people that bought homes at interest rates like well above 7.5%. Because if they didn't, and they're at like 7.4%, and they're refinancing now, that's not saving them a ton. And the fees associated with that loan, those are not going to come back to them for years. Okay, so they'd be better off waiting. I know it sounds crazy, but they'd be better off waiting. Great quote from Mike Frantioni, MBA Senior Vice President and Chief Economist. says mortgage rates dropped last week as incoming data points to a slowing economy and support a pivot by the Federal Reserve to begin cutting rates next year. The Federal Reserve has been very clear about saying they're not going to be cutting rates anytime soon unless there's some massive material changes. Well, what are those massive changes? Well, it would be a massive downturn in the stock market. It would be panic. Not people whining or complaining that they couldn't have bought a house because they weren't insightful enough, and that's the truth. Well, the Fed said 2.5 years ago, we're going to raise rates. And someone like the economic ninja was racing around going, you better lock in a refinance right now because this is going to get nutty. And so when people are whining that they can't buy a house, oh, there's a housing shortage. That doesn't matter to the Fed, okay? Because remember, if the Fed is known for losing control, that's a charter. They're a private bank. I know it sounds crazy. Most people just don't believe that. But you have to realize they do not want to be blamed for a crash. And they also don't want to be blamed for hyperinflation. So in this moment, can you imagine if the Fed said, you know what, let's lower rates? What would happen? A ton of people would dive into all kinds of credit markets because lending would get cheaper. They've been used to that monetary heroin, right? In their veins, and they still remember what it feels like and how much money they made. Well, if they started to lower rates now, they would dive in and it would cause hyperinflation in so many different asset classes. They know that. That's why they're not going to lower right now. They're going to let the market come back down to them. So it says here, as a result, applications to refinance a house loan or home loan increased 19% last week from the previous week. Do you see what I'm saying by the clickbait? This is absolute clickbait. When people are like, oh man, everyone's doing it, I should do it. It's week over week. And you have to also remember the desperation of some people of where they were buying a house just a mere few months ago to where they are now, okay? So this is week on week. It says refinance demand was 27% higher than the same week 1 year ago. Borrowers who had seen, now, okay, this is very serious. And this is where you need to cut out, stop, don't listen to the minutia. And this is serious stuff. This is the signs. I teach this in the real estate crash course. 80% off, links down below if you want them. If not, no worries. This is very serious. Now think about this. Refinance demand was 27% higher than the same week a year ago, which means 27% of the people out there, I'm breaking this down as simple as I can, that back when mortgages were being refinanced back then, like literally at 4.5%, maybe 5% a year ago, there are 27% more people out there refinancing right now. Okay, there's only two reasons, because interest rates have not come off that much. We're down what, a point and a half, maybe, from 8%, 8.25% to 7%. That's with 20% down, right? So people have their equity built up in their home, hopefully. Those people, a mass majority of them, aren't refinancing because of the lower rate, and they're going to save. They're cashing out. They're debt consolidating. I talk to lenders all the time. If you're a broker down below, loan officer, please let people know how many people are, fire call. Sorry, it's a habit. Every time I talk to one of them, they're saying so many people are doing cash out or debt consolidation refis. Okay, which at that comes at a higher price, comes at a higher rate. Okay, why? Because lenders know there's more risk. If you need money, tap into your value of your house for your loans, for your bills, you are at a higher risk. So it says here, applications for mortgages to purchase a home rose 4% for the week, but they were still 18% lower from the same week a year ago. What does that mean? New home purchases are still drastically lower today than they were a year ago. Home buyers today may be getting a break from lower mortgages, but there's still tough competition in a market with high prices and few homes. Mortgage rates have not moved much this week, as economic data so far has come in aligned with expectations that could change Wednesday, depending on the outcome of the latest Federal Reserve meeting. Let me ask you this. What do you put down below? Do you think the Fed's going to raise rates? Do you think they're going to keep them the same? Or do you think they're going to lower them this month? I believe they're going to keep them the same. And I do believe that if we don't see more consistent drops in the real estate prices and in other prices that deal with inflation, we're not going to see the Fed pivot at all next year. And so what does that mean? That means eventually everything's coming down. That's what you need to realize. Everything is coming down because the Fed has to get control of inflation. If they pivot anytime soon without a big material change in prices of assets, whether that be homes or whether that be stocks, you gotta realize they're not gonna lower rates. So that means there's one guarantee. There's one guarantee here. Things are gonna get cheaper, but they're not gonna get cheaper the way you want. They're gonna get cheaper because people are gonna lose jobs. That's something they've stated. Hey, I hope you got something out of this. Thank you so much for watching. The Real Estate Ninja is out.